Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. As you can see, I have my good friend Stocks with Josh. This is my Technical Tuesday. I left an earlier video that I absolutely want everyone to watch. So there's going to be two videos at the end of this video, right? One will be in this box. That'll be the video that I did earlier. And then Stocks with Josh is going to do Wall Street Wednesday. And that video will be in the box at the end of this video in this box, okay? I just want to talk about what's to come, okay? We do know that the CPI numbers are coming out Wednesday morning, an hour before the stock market opens, okay? So by the time the stock market opens, we will know what the CPI numbers are. The Consumer Price Index. What does it do? It measures products and goods and services bought and sold. It measures inflation. Okay? Just a roundabout number. It measures inflation. Now, if it is high, meaning inflation didn't peak or inflation is not slowing down, then that's not going to be good for the market, right? Especially in this environment where we have a lot of retail stocks or what we call meme stocks are reporting. And so a lot of these stocks have high multiples, so they're very expensive. So that's another reason why it's just not a good week for stocks. The only major stock we got reporting, one of the major stock we got reporting is Disney on this week. So this is going to be a choppy week. It already started out choppy for stocks in crypto. And so instead of looking at an individual stock or crypto, I thought it best for us to look at the overall market. Okay? I'm about to cough. I was chewing on some peanuts. Excuse me. And so I got Stock Josh here, and say hello to the people.
Hey, good people. I'm glad to be with you guys. Larry and I are going to have just a basic conversation. Sometimes the best thing to do is to take a broad step back to look at the market in a bigger view. And I think that's what we're going to do today. Not as many drawings from me today,
Right.
but I'm just going to give you some the big picture views that I'm seeing.
Yes. And so I talked about not fundamental and not technical. And so I want you to know something about technicals. You know, technicals are based off of fundamentals, right? They're kind of measured, they're kind of married together. You know, I've heard people say they have nothing to do with each other. I disagree with that because a chart is moved by what happens fundamentally to a stock or a company, right? So if a company says we're laying off half of our employees, then the chart is going to react to
Yes.
that. And so they are connected, all right? And so the fundamentals have been off this whole year, really. And the technicals keep changing because the fundamentals have just kind of been off. And it's because of everything that's going on. You know, the geopolitical situation, which is not the biggest threat on the market right now. I've been saying it all this year. The Fed, and inflation and how we're getting it under control. And so that's what we got to look at in this time period. This has been the worst start of a year since the Depression, not the recession, the Great Depression of the 20s. That's how bad this year has been.
Well, a little comment on fundamentals and technicals. So when you are in a bull market,
Go ahead.
fundamentals are the way to go. Okay.
Yes.
Because really, you're trading the trend. The trend is
Trend
up,
is just- yeah.
and what you want to be is reactive to the fastest moving companies, fastest moving stocks, and
Absolutely.
that's based on the news story, right? That comes out. Now, Larry, what have you and I been saying in our conversations about trading is that we're having great news stories.
Yes.
And the market is like, eh.
Yep.
So you can see that at this moment in time, fundamentals and news isn't even driving.
It's not driving.
So this is where technicals are a little bit, they can be, you absolutely can play technicals bullishly, but right now we're playing technicals defensively.
That's true.
The question is, can we go lower, right?
Yes.
And I've been
How
saying
low can we go?
over and over again, to trade the range, right? We have to, because we're not making all-time highs right now.
Correct. Let's look at some charts.
Okay, well, this is what I wanted to take a step back, right?
Okay.
I want to talk about the chart that CNBC put out. Okay. And this is the
You and I have talked about that.
the
Cycles.
the markets in turmoil.
Yeah,
segment,
it comes in cycles.
right? And every single time markets in turmoil has premiered on CNBC,
Yep.
within 12 months, 94% of the time, the markets have hit a new high.
Yep.
And so I thought it was great news when I saw that they were
Right.
premiering markets in turmoil.
Right.
They're very lagging,
Yes.
responders to the market. But
Yes.
when you take a real big, broad look and you take a step back and you're asking yourself, okay, we have to remember that this is not just going to keep going down, 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 down.
All of the companies in the stock market are not going out of business. It's not happening. It's just there is a purging that's happening, and mostly to the stocks with the high multiples.
Yep. Now I'll tell you another very broad indicator that it's not one that enables you to make specific trades, but it's the fear and greed index for
Right.
Bitcoin. Right.
Yes.
Now when the indicator goes all the way to the green,
Yep.
right? If you don't sell when it's all the way on the right side,
Yeah.
You've lost your mind.
Yeah.
Right. When the indicator comes all the way to fear. At 11, like we hit
Yep.
11 the other day.
Right.
If you don't buy,
Right.
you're making a mistake.
Yep.
Folks, that is there now, right? And so we're at maximum fear. And so, I think that we've got to go with the broader view right now. Okay.
Yeah.
Tomorrow the CPI's number is coming out,
Yes.
right? And we understand that could send the markets reeling.
Yes.
But I actually am going to say that there's limits to how far it can reel.
That's true.
Last Monday, I told a lot of people that we weren't seeing the wick down on the candles that we needed to.
And when he says tomorrow, if you're viewing this, he means Wednesday the 11th, May 11th.
Yep.
Yep.
And so we told you guys that we really weren't seeing that flash down at the beginning of last week because the candles, had no tails. There was no moment at which it came down in which buyers came in.
Yeah.
And then at the end of that week, we've seen that drive down. I'm actually going to go out and say that I still don't see the type of candles that I'm looking for and the movement that I'm looking for, because I do feel that now, whether it's tomorrow morning or if it's in response to what the Fed says, I do see that there's plenty of room for a flash down.
Yeah.
This is I don't know that we even
Yeah.
get into the charts today, but I'll tell you
Yeah.
what I saw consistent on each and every chart.
Yeah.
There was a lack of volume.
Yeah.
So we're actually driving lower on less volume.
Yeah. We don't even need charts today, really. Let's just it is what it is. And then people are trying to gauge how low can it go, right? So let's talk about that for a minute. What do you think how far the market can drop down?
Well, okay, so I appreciate that question. I have a great answer for you.
Okay.
Now, from a very technical point of view, there is a significance to numbers in trading. So I'll take a step back. A day trader understands that as soon as he gets to round dollar, that it becomes an obstacle. So if a stock is driving up to, let's say, the $10 range at between 960 to 990, it starts slowing down.
Yeah.
It has to come back, and then it's got to make another attempt at that round number. Well, numbers matter in trading, and here's the number we're up against right now. It's that 20%. So if we drop below 20% on the SPY, we are going to get into crash territory.
Yes.
And here's where it matters, because going back to that fiduciary responsibility of a lot of the money managers, is it's going to begin to trigger sell. Okay.
Right. And a lot of them are getting pressured by their clients.
Yep.
A lot of the hedge funds are getting pressured and have been they've been under extreme pressure, especially in this last week, by their clients.
Yeah. So they have to defend the spot we're in. Now we're at about 18.5 to 19%.
You're right there.
We're knocking on the door of a crash,
we are,
right?
absolutely.
And
so a correction, for those of you that are new, a correction is between when it hits when it dives 10%, right? A crash is from 10% to 20%.
Well, yeah, 20%
negative.
would be greater. Okay,
Greater
a crash
than
would be
20%.
greater than 20%.
Greater than 20%
And
is what I'm saying.
a lot of people, if you don't know
And
where
a
we're at,
correction is greater
Yes.
than 10%. So 10% or more is
Exactly.
a correction. 20% or more is a crash.
exactly. And we're knocking on the door of 20%.
Yeah.
So I think the Bulls have to defend 20%, you could say, with all their effort, because if we do break below 20%, it's gonna trigger a lot of sell orders.
Right.
Because they can take so much of a hit
Yes.
in their overall portfolio.
Yeah.
But there comes a point where the investor says, "Why didn't you sell
Why didn't
my
you sell?"
position when we
Exactly.
got into crash territory?"
And a lot of them, believe it or not, hedge funds have robots trading for them.
Absolutely. It is automated.
It's all automated, good people. And there's more volume traded by robots than there are people. But that's a whole nother conversation.
Yeah. So, and I'll remind everybody of this, that even when it breaks above 20, if it did break below 20 and it flashed down, the same automated purchasing would be there. The short sellers are going to be closing their position to take profits. So that's what we're going to be looking for.
Yep.
I feel that I think that I would like to see the Bulls defend it, and I think there's a strong possibility that they will.
Yeah.
This is another conversation, Larry, that you and I have had many times. We're moving towards the midterm elections.
Yeah.
And how do you think the politicians are going to sit by idly
And
offer up to the American people essentially the market on fire?
well, I'll tell you two things. It's always a midterm thing. Is a midterm thing. The stock market and gas prices.
Yes.
Always. And I'll tell you something else historically.
So you're telling me cheaper gas is coming?
Cheaper gas is
coming, folks.
I've been saying this since 2007.
I need that cheaper gas.
Yeah, 2007. Me and you had the same thing in 2008.
That's true.
When I was telling you then, I
Yep.
said, Josh, midterms, gas will magically be cheaper.
Yep.
And the politicians will be going, the gas prices are coming down. And we're not even gonna get into that. But it's all organized. Just put it that way.
Yeah, so I think that those are the levels that are going to be defended.
Yes.
I would be surprised if there was enough impetus to push us below 20%.
What do you think about the NASDAQ?
The Nasdaq has actually suffered more than anything else, and you and I know that it's the PE ratios that they're not going to be. They got to bring those valuations down. Right?
And they're coming down every day. They're just being chopped down.
Yep, and these companies have got to show some semblance of they've been given a lot of room, a lot of maneuvering space, but they've now got to show that they can actually make a profit.
Yes, and I'll say this, and we'll probably end it. I'll say this. For some of you guys that have been into some of these extremely, extremely overvalued companies, these stock prices on some of these companies are not going back to where they were, because where they were ridiculous. That's why I want you to watch this video at the end. And I also want you to watch Wall Street Wednesdays, okay? Because I show you at literally some of these companies where they IPO'd was absolutely ridiculous.
Yeah, I want to chime in. You know, Larry has been, I watch Larry's show. I've been watching it for years now. And he's been telling you guys to cash up since last year. And I remember when Coinbase IPO'd, he told everybody, he said, I'm not buying it.
I'm not
it's
touching
too
it.
rich. I'm going to buy some of the coins on Coinbase.
Exactly.
Right. So the message has been consistent.
Yeah.
You know, and I love that video that you posted today. And I think
Okay.
that would be a high recommendation.
Yeah. Hey, good people. We just want to be here. We want to educate you. We want to show you the full path. You know, sometimes you got to just step back and zoom out. Look at the overall picture and see what's happening, right? So if your entire, well, I'm not going to use that analogy because the war is going on, but you know, hey, if you're in a cruise and it's sinking and the whole ship is taking in water, you're not going to call the person that makes the bed and go, hey, why is there water in my room? Like the whole ship is taking on water. And that's what's happening to the stock market right now. The whole ship is taking on water. And if the stock market is taking on water and the NASDAQ is taking on water, so goes crypto, right? So when you zoom out and see what's happening to the overall market, you get an understanding and you have a plan. My plan is to continue the dollar cost average. We're going to just talk about that on another, you guys, I'm going to talk about that until I'm blue in the face. And you know what? One of these days we'll do another show, and I want to talk about the two different ways that we discuss DCA.
Yeah, there's dollar cost investing, and there's dollar cost swing trading.
Swing trading, exactly.
And there's a little bit of logic to how you approach them both ways.
Absolutely. Yep. So hey, listen, here's what we are doing. I got two links below. One is Webull. That's where we're doing our swing trading. And I know for those of you that have Webull, you see a lot of red. I know I see a lot of red in mine. You know, it just is. It is what it is. I got 5 portfolios, and some of these swing trades we just got caught in, you know. But
at
I'm
these
still
prices,
at these prices.
It's hard to be upset because
Exactly.
the risk lower
Yes.
below is not as significant as the opportunity above.
Absolutely. And I'm going to continue at the time that I see where I see the S&P where I think is going down to. That's when I'm going to start DCAing.
We could hit that tomorrow, brother.
We could hit it tomorrow. And that's when I'm going to start DCAing down in those positions, right? And so that's what I wanted to say. Also, we also have a link below called Moo, and that's where we're cashing up, getting ready to buy the recession or where we think the bottom is. So download both. Both of them are going to give you a ton of free stock. You know, just put $100 into both of them. And if you only have one trading platform, it's time for you to get 2 or 3. It really doesn't matter which one you use. But if you don't have anything, click my link below and download those 2. Anything else you want to say?
Well, hey, we'll look forward to seeing you guys in Wall Street Wednesdays.
Yep, this is different. Sorry, but this is a conversation that needed to be had. And hopefully someone gains something from it. I love you guys. Live, love, laugh, and learn. Make sure to join us over at Wall Street Wednesdays.